For most jobs, employers will withhold some amount of taxes from each paycheck and pay them to the IRS on your behalf. So you may ask the question, why do I need to file taxes if they already took the taxes out of my check? First, let's go over what a tax return is. In the US, there is an annual filing of paperwork with the Internal Revenue Service, or IRS, to report your income and other relevant tax information. Depending on your life factors, how many people you support financially, if you earned any interest from investment accounts, credits you may be eligible for from paying for education or a mortgage, you may owe the IRS money, or you may be eligible for a tax return. Everyone must file a federal tax return, but depending on the state you live in, you may also need to prepare a state return. Tax day in the US is typically on or just after April 15th. Unless you obtained a personal extension or the IRS has extended the deadline for filing, you must submit your tax return by this date to avoid being charged any penalties. When you file taxes, you are filing for the previous calendar year. Anyone who employed you in that year, or banking institutions you made interest with, should be sending you tax forms that you will need to include in your tax return filing. The forms you receive will depend on factors like your employment type or life situation. If you work full-time for a corporation, you will get a Form W-2 that lists your earnings and the taxes that were deducted. If you freelance or are employed under a contract, you can get a Form 1099 NEC that lists your earnings. You might be sent records demonstrating dividends or interest from investments, Forms 1099 DIV or 1099 INT, or interest paid on student loans, Form 1098E. You will receive a Form 1098T if you are a college student, or you have a dependent who is, to help you determine deductions and credits for educational costs. This form will show how much tuition you paid as well as any money you received from grants or fellowships. Tax documents are usually mailed to you in late January or early February, so you have about 2 months to prepare your return by the deadline. Experts generally advise filing taxes sooner rather than later. Your chances of preventing identity theft related to taxes are better the earlier you file. Also, if you are owed a refund, you will receive that earlier the earlier you file. You can file with an accountant or easily file your taxes yourself online through a tax preparation service. In your return, you will need to include all your income information, and then you are able to enter any deductions and credits you are eligible for. There are many electronic filing services available, from providers like H&R Block and TurboTax. The IRS also has a free file service available to people who fall below a certain income level. If you made less than $73,000 in 2022, you should be eligible for this service when filing in April 2023. The IRS also has tax tutorials you can learn from on their website. They walk you through things like tax credits, dependents, and exemptions. If you file your return by yourself, it may be helpful to reference these tutorials while you fill out your return to make sure you understand everything. Leave a comment below to let us know what you'd like to learn next. Be patient with yourself, keep learning, and do what you can to better your financial situation. Thank you for watching.